Welcome to The Green Rush, a podcast about the business of cannabis. On a weekly basis, hosts Ann Donahoe and Lewis Goldberg talk with the CEOs, politicians, and cultural icons driving the cannabis industry forward. This week is another conference episode. A few weeks ago, Lewis hosted a panel at the Cannabis World Congress and Business Expo in Los Angeles that featured a slew of our past guests, including Kris Krane from Forefront Ventures, Tahira Rehmatullah from MTech, and Beth Stavola from MPX Bioceutical. The conversation is a rollicking one and not to be missed. So don't sit back, lean forward. And now on to our panel discussion with Lewis, Kris, Tahira, and Beth.
You guys are in for a treat because I am joined on stage today by three, would have been four, but William couldn't make it, three of the smartest people in the cannabis industry. We've got Kris Krane from Forefront Ventures. We've got Tahira Rehmatullah from MTech and Beth Stavola from MPX Bioceutical. I would love it if each of you, Kris, first, just take a moment, introduce yourself, and just say a little bit about what your company is and does, and then we'll get into the real questions. That way everybody can know who's saying what.
Sure. Thanks, Will. Thanks for having me here today. Can everyone hear it fine? I don't think we really need the microphones, but...
Hold on. Turn your mic on.
Is it on?
Is yours on?
It's on.
Mine's on, I think.
Yep. Hello, hello.
There we
Turn it
go.
up or something? Okay. I can talk loud, too, if that's easier. So my name is Kris Krane. I'm the president of Forefront Ventures. Just a little bit of background. I've spent over 20 years working on cannabis, the first half of or more in the policy realm. So I was the associate director at Normal in DC for 6 years. I was the executive director of Students for Sensible Drug Policy and made the move into the industry in late 2009 when the industry was very, very new. Excuse me, been at this about as long as anyone on the business side. Forefront Ventures, we have a consulting wing, Forefront Advisors, which we started in 2011, where we've worked with applicants and operators around the country. And we have our operations wing, which is sort of the bulk of what we do today, where we are licensed to cultivate, dispense, produce in 4 states currently, applications pending in a handful of others. And we are in the process of getting publicly listed up in Canada by the end of this year, which I think is a lot of what we'll be talking about here. Yeah, thanks again for having me here.
And Tahira?
My name's Tahira. I'm CFO of MTech Acquisition Corp, which is a special purpose acquisition company, otherwise called a SPAC. It's a shell company that's listed on the NASDAQ that we IPO'd in January. We raised $50 million. And the way that SPACs work, which we'll get into a little bit more, is that they're shell companies with the whole intent that you bet on the industry and the management team. So we're the first SPAC that is listed specifically to focus on the cannabis industry. So we intend to take an ancillary cannabis business public with a target to close by the end of this year.
And Beth.
Yes, thank you for that kind introduction, Lewis. I am Beth Stavola. I'm Chief Operating Officer and President of U.S. Operations of MPX Bioceutical Corporation. We were one of the first RTOs to RTO U.S. assets, U.S. cannabis assets, into a Canadian shell. So we did that in January of 2017. Since then, we've made about 6 acquisitions across the country, and also acquired an LP in Canada in the last several months. The thought there is to really be able to participate in the international market, given that there are other countries that are opening up import-export opportunities, and we feel as if we can bring our U.S. brands, so our MPX concentrates, MPX edibles, use all of our IP in Canada, of course not be crossing the border with the product, but just be using our IP. And it'll be exciting to be able to, be shipping, our brands to whether it's Germany or Australia. There's a lot of opportunity there.
So, Tahira, you've got MPX, who trades on the Canadian Stock Exchange. You've got Forefront, who will probably eventually trade on the Canadian Stock Exchange. You have a publicly listed cannabis company, kind of.
Ish.
But you're on the NASDAQ.
Right.
Right? How'd you do that?
Sure. So the reason why we opted, and partial reason to opt to go for ancillary businesses, is because those are businesses that you can list in the U.S. Nobody has tried to list on the New York Stock Exchange or NASDAQ yet. Most of the companies that have IPO'd in the U.S. Are on the OTC. So we saw an opportunity not only to fund a company that could then grow into a much larger platform and accelerate its growth, but we saw an opportunity to also highlight, particularly in the U.S., all of these other businesses that have developed in cannabis that support the industry. And so what most people think about is cultivation, the actual end product, but because of the way U.S. legislation has developed or not developed, the industry has been required to create all of these different platforms. So technology, different software, services, consulting, all of these different businesses. And we saw a really strong opportunity to take one of those businesses and start a roll-up that we'd be able to put on the NASDAQ.
So Beth, you're listed in Canada.
Right.
But I'm sure you aspire to be just like Tahira and a NASDAQ listed company.
Absolutely. I'll be one of the first ones that's online to be listed on the NASDAQ or potentially the New York Stock Exchange. And I actually just heard something that really surprised me this morning when we were talking about this, is that the New York Stock Exchange seems to be a little bit more friendly to the thought of doing this, which is interesting because just back in January, a friend of mine is the CEO of one of the big REITs, and we all probably know that there was one REIT that did go public on the New York Stock Exchange, and my friend was slotted to go public shortly after that. And there must have been, the thought is there must have been some kind of a call from someone at the DOJ to potentially the New York Stock Exchange's general counsel that said, you've done one, but you probably don't want to do another one. So they got waitlisted. So it was interesting because they don't touch the plant at all. They only own the real estate and rent it to people like me.
So, Kris, you are amongst many companies that are hurtling towards a public listing. And you guys recently raised, over the last year or so, about $20 million. Are you finding that we're seeing investor fatigue? Is it harder to raise money now, or is there still this just insatiable appetite for U.S. companies?
So it's always hard to raise money. Just to preface what I'm saying with it's not easy. It's really hard. It's a massive grind raising capital in this industry, no matter what the enthusiasm level is. Mm-hmm. That said, it's easier today than we've ever seen it. We're seeing a lot of enthusiasm for U.S.-based companies, particularly multi-state operators in the United States, amongst public sector investors in particular, and particularly those who invest in public sector companies in Canada. Last week, or 2 weeks ago now, as part of we're doing a pre-RTO raise. So we plan to go public later this year. We're doing our last round now, and so our bank up in Canada took us on. It's called a roadshow. It was quite an experience. I've never done something quite like that before. It was like 25 meetings in 4 days in 2 cities.
That is a grind.
Yeah, it was crazy. They have like a car waiting for you outside every meeting, taking to the next one. It's Beth knows the deal much better than I do.
I know it well.
I'm sure you both do, actually. This is new for me. But it was interesting. What the investors were saying over and over and over again is that they are really hungry for multi-state U.S. operators. And I think part of the reason is almost all these investors put money into Canadian LPs fairly early on. So they've done quite well with companies like Canopy and Tilray and some of these other ones that are getting a lot of headlines. I think they also realize that the valuations for a lot of these Canadian LPs are not really sustainable right now.
I don't know what you're talking about.
You mean Tilray's revenue?
You mean when Tilray hits 300 is 90 now?
With negative $28 million in net revenue. It's amazing.
It's just math.
Yeah.
Yes, it's just math.
And if you look at a Canopy, just 3 years ago, that was 2 separate companies. It was a $300 million company, which was Tweed, and an $80 million company, which was Bedrocan. And what is it, a $15 billion company right now, yeah. 3 years later. So that is just outrageously incredible growth. And it reminds me a lot of when I worked on Wall Street. I sold a lot of internet deals, all kinds of deals. But a lot of internet deals. And it was interesting because in 1999, you really couldn't get anybody who was a plain vanilla, whether it's an Oppenheimer Funds or an Alliance Capital or a TIA, a Cref that we were talking about, to even look at these. And they, the attitude really back then was no one's going to trade on, no one's going to trade online or internet schminternet. And it was really the scrappy hedge funds that were buying up these early early stage companies. And I think we're starting to see some of that in our industry now.
Yeah,
So-
to finish the thought, what we're seeing is you're seeing these investors who have made a lot of money on these Canadian LPs over the last few years, and they're starting to cash out. I mean, it's relatively small amounts, and putting those instead into U.S. operators, because what they're seeing is the U.S.-based operators don't have those kind of crazy valuations. Some, you may argue, are overvalued, but by and large, the U.S. companies are valued substantially lower than their Canadian counterparts, so they can take some of those profits they made in Canada and make those same bets on U.S. operators, which they think are 3 years or so behind. And when you look at it, the population of Canada is less than the population of California. So when they're looking at what's the next big boom here, it's probably U.S.-based companies, and they're making the bet on U.S.-based multi-state operators.
So you guys have all had to go out and raise capital in different forms or another. And historically, when industries are young, you get angel and venture capital rounds, and they usually come from institutions. It's mostly high net worth, but a lot of institutions come in. You have VC funds that are coming in. That is not the case in the cannabis industry. It is almost exclusively funded by either family offices or super high net worth individuals. At what point do you think that we see a change? And Tahira, I want to start with you on this. When do we start to see institutions come in, not necessarily from a public company investment perspective, but on like if they were going to want to invest in Kris or other private companies, when do we get to see the institutions start to play?
So I think we're already seeing a little bit of it. I mean, an example is, like Tilray. They say they had some institutional investors in their pre-IPO round. So I think in that round is where you're starting to see a little bit more comfort because they're being underwritten by banks, which is one of the biggest issues in the U.S. Right? You don't have banks who are willing to underwrite the industry, take that risk. Cowen is one that's kind of led the way, and I believe Tilray was the first deal that they did to IPO a company. But they were
on the MedRelief deal as well, the initial MedRelief offering.
So, but they were the only ones, really,
Yes.
right? And I know people at Goldman, at JP. I'm like, when are you guys going to get into this? And they just can't get it through compliance, and that's going to continue to be an issue. But even in our raise for MTech, we have some hedge fund investors, we have venture capital. So you're starting to see that. Now, some of them are US, some of them are Canadian. So you have that mix as well. And obviously, Canada has a very different tolerance because they understand the landscape so much better and they look at it through a very different lens because of that federal legality. But I think we're starting to see the shift. I do think it's going to be slow. We're not going to see these massive institutions come in quite yet because they have a fiduciary responsibility to make sure that they are obeying all the laws and protecting all of their investors, and there's constantly that federal risk. So it's starting to shift, but
so Kris, on your roadshow, you're seeing a mix of people. What kind of reaction are you getting from the institutions?
So the
without violating anything that you can't violate.
Sure. Well, I will say is most of the folks that we're meeting with are not institutions. They're public sector investors, they're family offices. Although I would say in about 2 weeks or so, maybe a little less, I would on fairly good authority, there's going to be a pretty big announcement of a major institutional investment firm out of New York, brand name institutional investment, not a spin-off investment, but real endowment money, pension money that will be going into a pretty large debt deal in the industry. It should make waves when it happens. I can't speak to who it is or who they'll be funding.
You jumped my question, man.
But keep an eye out for that in the next couple of weeks. This will be a name brand New York institution that will be making the first plunge into cannabis.
So this question is for both Tahira and for Beth, and you guys can rock, paper, scissors on who answers first. There should be 4 panelists. Sadly, our William Simpson, who's the CEO of Golden Leaf, couldn't join us. But you would see 2 women and 2 men. Now you see 2 women and 1 man on a panel. You are 2 of the smartest people in cannabis. It seems like cannabis generally has been more welcoming to women in roles of leadership than other industries. You don't see the same level or the same number of people, same number of women in either C-suite or board positions as you do in this industry. Can you guys talk about how you're received on Wall Street as you guys are in the whether you're talking to current investors or you're in the process of raising money? What is the reaction from a women's perspective, or is it just completely irrelevant?
Do you want to go first?
I'll let you go.
Okay. I've always worked in a male-dominated industry, so I've always felt very comfortable. I've never felt as if my gender was something that held me back in any way. And I think frankly it differentiates us. I mean, we're two C-suite level executives on public companies, and I don't know that there are that many other at those levels. However, there are a lot of women in the business. I'd personally love to see more women, promoted to C-suite level positions.
Yeah, I come from non-cannabis finance world, so working in male-dominated environments is kind of, what I've always been used to. Often also working in environments that lack like ethnic diversity, so that's just kind of, I think, par for the course. Cannabis has obviously shifted in the last couple of years too, as it's become more mainstream, and there's a higher risk tolerance for people to get into it from a lot of banking, venture capital, more traditional companies. So you've seen that shift, so it looks a lot like other industries that I think I'm fairly used to. To Beth's point, I don't see a lot of women at leadership levels. In my opinion, I'm usually the only woman at the table. Usually,
okay, so
the
what
only
you're saying is
person
I'm just
of color.
completely wrong in the thesis of my question.
You're right in some regards, in that when you think a couple of years ago, it was kind of a fresh slate for everybody. Everybody could start companies, and it was a very entrepreneurial mindset. It still is, but now when you think of where traditional capital comes from, it's the same thing that influenced tech. It's the same thing that's starting to influence cannabis. You're seeing it come from Wall Street, from venture capital, from private equity, and those tend to be largely male-dominated. So I think I see a little bit more of that, but there is definitely an opportunity because it is all new. But I think I'm starting to see a lot of the similar trends that I saw in finance.
I was just going to say one thing that I would add on is I've been in the industry since 2012. And even the product mix, was really geared toward men. And if you look at the stats, women and men smoke as much marijuana as each other. So really we've focused our efforts on really bringing some products for women.
Absolutely. And what I was going to say, and where you're right, is that there has been an influx, I think, of women on the leadership side when it comes to product companies, because they're looking for products that actually serve their demographic, right? So trying to create that diversity and that you see yourself when you see these products. And that's starting to shift. I think there was a stat at a panel a couple weeks ago from MJ Freeway that they noticed in some of their data that in Florida, the largest demographic of buyers, and I think you may have been there, so correct me.
Yep.
But I think it was women between the ages of 50 and 60 who were the highest purchasers.
They're the fastest growing new users in the industry.
In Florida. And so, that's really interesting information. So as the products shift to actually serve those demographics that have traditionally not been served by the illegal market, I think that's where a lot of female leadership is coming in.
Kris, you were gonna jump in.
Yeah, I mean, at the risk of mansplaining the female question.
I can't wait.
No, I wanted to make an observation again. If we go back to the roadshow I did a couple of weeks ago, and I think this is more an indictment of the sort of the Wall Street, Bay Street, the Canadian Wall Street. I just learned this myself.
Yeah.
The Wall Street, Bay Street culture than it is of cannabis, but it reflects on the ability, I think, of female-owned businesses to raise money. As I mentioned, I was part of, I think it was 26 meetings in 4 days, probably a total of 50 or so, give or take, investors in all of those meetings. Not one woman, not one.
Wow.
And 3 people of color. The only women that we interacted with during this whole excursion was actually the week before, when we had to pitch the sales desks of a couple of banks that we're working with, and there are women on the sales desk. So they can have investor clients, right? They'll let them go out and have clients and maintain those relationships, but not one amongst the actual investors. I turn to my partners who are who have Wall Street backgrounds. I come from the policy world, so it's a little bit different from me. I've been learning the business side of it, and made this observation. I think it was after our second day. We still had 2 more days. It was like, oh yeah, that's Wall Street. And I mean, I can only imagine being somebody who, obviously I'm a white male, but it's still somewhat intimidating for me to go into these meetings with all these Wall Street investor types. It's not my world. I can only imagine what it's like being a woman or a woman of color, stepping into meeting after meeting after meeting and not ever seeing somebody that looks like you across the table. I really think it has to make this a lot more difficult for female-led businesses to get access to funding when they're not able to interact with people who look like them.
So the amount of money that is flowing into the industry now is just overwhelming, right? You saw Constellation put $4 billion into Canopy, a month or so ago, and this industry has historically, and I kind of laugh at the word historically because it's it's 2018, 2012 was like the first adult use state, so it's 6-7 years in total. Math is not my strength, but the amount of money that is coming into it now is massive, hundreds of millions of dollars, and companies that have billions of dollars of valuation. Is it too late for an entrepreneur to really start, or can they do it on a shoestring, or are we in the third or fourth inning and they are just blocked?
I would say on the dispensary side is kind of the cheapest. Dispensary or laboratory, would be the cheapest to get up and running. The cultivations end up indoor cultivations. We spend upwards of $250 a square foot to retrofit a building. So you're looking at a 30,000 square foot building that you're going to spend $10 to $12 million on when it's all said and done. So,
I'm glad you did that calculation.
So I would say the cultivation side is, and by the way, it's my least favorite and most challenging side of the industry. And then the production side of things, I would say is probably in the middle of the dispensary and cultivation. The equipment, extraction equipment is expensive and it's becoming a lot more sophisticated now. The states are actually also putting in many more regulations. For example, if you're going to do hydrocarbon extraction, most every state, other than Arizona that we operate in, require a C1D1 room, which is an explosion-proof room. So, these are,
definitely need those.
Yeah, we definitely need those. So those are the things. And I think as regulation continues to get tighter and tighter, like what we do is we operate currently in 4 states. So Nevada is by far my toughest state to operate in.
Why?
They know how to regulate highly regulated businesses. They've been doing it forever, from gambling to prostitution to everything else. And so we operate at that level in all of our states just because we know that's where it's going.
So Tahira, what do you think? Is it too late for the little guy?
No, I think it just depends on what vertical you're trying to operate in. I mean, again, kind of going back to the U.S. has this really unique ecosystem of businesses that operate only in the U.S. They'll be spreading, a lot of them have spread across the globe as needed, but because we're in a federally illegal environment, you have all of these different products, services, platforms that are out there. So I think it's really understanding where is there still a gap, if it exists, or is there a product that's serving the market that isn't totally serving it? Finding that right gap and then being able to create something in that space. Then creating another cultivator in a state that already has a lot of cultivation. It's very expensive anyways. There are a lot of licenses. Creating another vape pen product in the masses of the brands now, right? So there are crowded spaces. 4 years ago, 3 years ago, maybe even 2 years ago, I wouldn't have said that about especially brands and those types of products. But now there are a ton, and there's like CBD and everything, and you can't tell the difference. And so I think it's really
you actually launched one of the national brands, right? I mean, that was your background. So why don't you take a moment and explain that?
Sure. So I started off working in cannabis with Privateer Holdings, and through them built the brand Marley Natural, which is a partnership with Bob Marley's family. So it was one of the first and kind of earliest brands that was prepackaged in the cannabis space that kind of didn't exist in a lot of markets, particularly when you think about the California market. But also just thinking of a brand that was national. We had multiple product categories. So we had cannabis, and then we also had accessories and body care, which was hemp seed oil that was in more mainstream retailers. So trying to create a multi-faceted brand that could operate inside and outside of the dispensaries.
So Kris, you come out of advocacy, right? Your background is not commerce, and I will give you mad props in that I think you have done among the best, if not the best job in making that transition from being an advocate to being an operator. But if you look at the industry right now, some estimates are that it's a $75 billion current industry. Some say it's $100 billion. But the licit side of it, the legal side of it, is tiny. How for operators that are trying to make the transition from the illicit to the licit side, and having to figure out how to do this in a regulated way, having to figure out how to raise money, is there any lessons that you can give them to, hey guys, here's the stumbling block that you cannot imagine that's coming up? Like what can you give them? I know this is off script, but I think it fits.
I mean, to preface, I didn't come from the illicit side.
I know.
I came from the policy side. So I'm one of the few people that's been involved in marijuana since before there was an industry that never actually sold marijuana illegally. So I don't have firsthand experience in making that transition. But it's really challenging. You have to be ready to do things under really robust and rigorous regulations, and that's just not how things operate in the illicit industry. And I think that that's challenging. So you need to lawyer up. Right? I mean, I don't mean that in like the criminal way, but you need to have good lawyers around you to make sure you have good operating agreements, that you have good applications, that you can that you're complying with all local regulations. It's a challenge, I think, for some folks. There's people who've done really well sort of managing a business in the illicit industry, but they've never had to deal with regulators, they've never had to deal with P&Ls and spreadsheets and taxes and all these other things. And so there's a pretty big learning curve there if you're coming just from the illicit industry into the legal industry. It's actually, I think, one of the reasons why we haven't seen a ton of people make that transition successfully. So I mean, one thing I would suggest is bring in a partner who has really good experience in the finance world or in the regulated business world. You can run the cannabis side of the business, but unless you came out of the business world and then went into cannabis and now you're coming back, you're going to be really well served to partner with somebody that understands it. I mean, I speak from experience there. Again, I didn't come from the listed industry, but I did come from the policy world, and I didn't have that business experience. And I don't think that I would be where I am or my company would be where we are if I didn't have partners who had that kind of experience, and we didn't build a team around me that has those, both the day-to-day experience on the finance side as well as on the direct operations side in the business world.
And I would add on to that, and I think, Kris, because we operate in some of the same states, that early on, the lawyers didn't know what they were doing. Also, so
it was cannabis defense attorneys who all of a sudden became cannabis business lawyers.
And one of my main lawyers is here, and I'm not I'm not talking about you.
You're doing great.
It was think about 2012. In Arizona, for example, because we were both there. I mean, there ended up being so many lawsuits because the lawyers did not know what they were doing. They were. The licenses were non-for-profit, so they had to be managed by management companies. Nobody really knew how the state was going to accept these management companies, and changing a non-for-profit, as you all probably know, can't be owned. It actually has to be managed, so you can change you could change the board of directors, but you can't technically sell it. So there's a lot of different nuances that I would definitely say lawyer up for sure, and Steve Len is a very good lawyer.
I mean, for when we were building Mara Natural, which started in 2014, one of my first hires for that brand, and Privateer has a fairly large legal team that was really focused on trying to make sense of the lack of law and the gray that exists, and it still does exist. There's a lot that's kind of been sorted out now. We have a little bit more like case law around it and just situations that you can point a finger to, but we didn't have that then, and so we were just kind of making it up and kind of inching along, saying like, let's try this. See if our hand gets slapped, then we'll do something else. But it was a lot of just legal opinion, making sure that you at least passed it by someone. I mean, everything from language that went on our packaging to like what went on our website, just like every little thing we passed through a lawyer, because you kind of need that protection. And I don't think that's any different today, particularly in the environment that we work in the U.S.
So let's get back to the capital markets for a second. We're about 2.5 weeks away from October 17th, which is, if everybody doesn't know what that is, it's the big day where adult use goes legal in Canada, right? And the Canadian markets, the Canadian public companies, the Tilrays, the Auroras, the Canopies, have these crazy valuations, right? They are not related in seemingly any way to actual operations. It's all a bet on the come. Do you guys think, I have two questions here. One, do you think that the 17th has been priced into these stocks? And what impact will the 17th have on you guys?
I mean, I can start. I do think the price is baked into the stocks, but then again, I wouldn't have expected most of these stocks to rise the way they have. So maybe you see another boost after the 17th, because it's all just based on speculation anyway. It's not based on actual metrics. So yeah, you might see another bump, but I do think it's largely priced in. And even then, you can't justify the valuations that that a lot of these Canadian LPs have just based on legalization in Canada. There's only 35 million people in Canada. Right, they're basing this on these companies are going to dominate the global market and export into these other. You can't get to a $20 billion valuation thinking that the company's only going to be active in Canada. There's probably not $20 billion worth of sales in Canada, period, let alone for one company. So I do think it's largely baked in. I'd be interested to get the thoughts from the other panelists as far as how it's going to impact my company. I don't know. I don't think it'll have a huge impact on us because we're not active in Canada. All of our assets in the U.S., all of our businesses in the U.S. So as far as a major G7 country legalizing marijuana officially for the first time might be a rising tide raises all ships type of deal. So all stocks, whether they have Canadian assets or not, might see a boost because of it. But it won't have any direct impact on our bottom line or our business.
How about you, Tahira? What do you think?
I would love to say that the retail market understands now all the market dynamics and everything's priced in, but I don't believe that to be the case at all, based on the way that stock prices have moved, particularly in the last couple of weeks. So I do think there's going to be a potential, just unfathomable rise in prices because of the excitement around it, and where that settles, I'm not sure. I mean, where some of the stocks trade right now, if you actually sit there and do the math and look at everything, they don't make any sense. But that's just the environment we're in right now because it's a momentum trade at this point. And until there's something in the market to say, no, this is wrong, I don't see us retreating. I'd like us to, because I think that things should get to a point. I have this fear of a bubble being created, and I think we're already in that process, and I don't want it to have a negative impact on all the businesses, which is what happens in bubbles, right? Somebody does something wrong, two people do something wrong, the whole market suffers. And we're so early that I would hate to see that happen, especially as all these other businesses go public. But to Kris's point, it could make everybody rise together, and that's kind of where they stay. So I do expect that just from the excitement that there will be another bump, and then we'll kind of see where that settles. I think I've heard a lot of speculation around as well, the impact that elections in November could have, depending on what different people come and go. And I think that'll be a telling signal as well. In January, nobody knew that Jeff Sessions was going to come out and say what he did, but we still saw we saw a plummet very briefly, and then we saw a rally. Yeah. And everybody was back to business as usual. So.
And what you're referring to is a repeal of the Cole Memorandum.
Exactly, right. Mm-hmm. So I would love to sit here and predict, but everything that's happened so far I've been wrong about. So don't trust me for stock tips.
You're one of the few companies that actually trades in Canada and has, feet. So what do you think is going to happen on the 17th?
Oh, I wish.
Other than that, it's a shit show.
I wish I had a crystal ball. I do agree that I think that we are going to see an additional bump. I think there's going to be more excitement, but I worry about the same things that you do. That because I lived through the internet, boom and bust, I think that there's going to be a lot of M&A going on. I think that we're seeing the companies that are north of $1 billion getting, much higher multiples, whether it's on top line sales, cash flow, EBITDA. It seems like everybody wants to go, with the big guys. And I think it's going to be really interesting this fall because it's a pretty small industry, so most of us really know each other. And there are so many TROs of great companies that are going to go out just like Kris's company. Did I say TRO? RTO.
I was like, what does that mean?
It's not a temporary restraining order.
I'm like, oh, I've had to get that.
Yes, thankfully. If I could speak to this concept of the bubble, because I think it's important. I mean, there's a couple things I want to say about that. Number one is if you want to limit your your downside liability a little bit on it, I would look for companies that aren't overvalued today. Right, there are some companies that are pricing themselves much more reasonably than others who are just, who are most of whom I think are resting more on relative valuations.
Well, that's a lot of the American companies, right? I mean,
it's everybody, but yes, but I would look for companies that are trying to base themselves on actual valuations who are really looking out for their investors who have come in every round, not just trying to take advantage of this exuberance, because those ones are likely to fall more. But all that said, I mean, even if we are in a bubble, and we probably are, right? If you look back, because this is all, again, it's all based on speculation, it's not based on metrics, and eventually this is going to have to be based on actual metrics. Right? When there are real metrics, it's going to come back to that, and it's not going to be based on speculation. And so if you look at what happens with the internet bubble, right, that was the same thing, right? In the early days, nobody really knew how these companies were going to get capitalized. It was all speculation on who's going to wind up dominating the internet, and eventually you started getting around to metrics, and there was a huge, there was a burst or a massive contraction. But I think the important thing to remember from that is that while there were lots of pets.com type companies, right, that had these massive valuations and ended up losing all their investors' money, there also was Yahoo and Google and Amazon and Apple, right? All of those were around during the internet bubble. They all saw contraction in their values when the bubble burst. They're all now worth way more than they were at the height of that bubble. And so ultimately what it comes down to is actual ability to execute. Right now it's all speculation, but eventually these companies have to be able to execute well. And I think there are companies out there. When I survey the American landscape, there are companies. I won't name names, right? But there are companies out there.
Names.
I'm not going to do that here. But there are plenty of companies out there that are doing a really good job in what we call the land grab, and they're gobbling up license here, license there, license there, right? And they're really good at creating these license portfolios. But I don't think they've put a whole lot of time into thinking about how do we execute this. In a way that is sustainable, in a way that's replicable, where you've got a portfolio of one brand here, one brand here, one brand here, one brand here. Well, eventually you've got to bring that all into one brand if you want to be a real national company. And if you haven't spent a lot of time building SOPs, building operations protocols, building really good brands, and you're spending all of your time just on the roll-up, like that kind of expansion is really difficult. And you look at like the restaurant world, for example, it's hard enough to run one really good restaurant or one really good retail store. It's way harder to take that to your second store and third store and make sure that those are being run the exact same way. The experience is exactly the same from store to store to store, right? The culture is the same from store to store to store, and eventually that stuff's really going to matter. So I would look at the management teams and look at what they're doing in terms of actually building a sustainable business rather than just executing a land grab, because eventually I think that's going to be really challenging for some of these folks.
So I'm going to have one more question, and then I'll open it up to you guys for questions. So I mentioned earlier the infusion of $4 billion into Canopy growth, right? And if you look at that just pile of money, it is more than the complete market cap of all of the public U.S. companies. I mean, Bruce Linton, if he was able to, it is.
I don't think that's true anymore. And MedMen's worth like $2 billion alone right now.
Yeah, but you add up everybody else, and it's still, you're close. All right,
close,
let's say it's close. How about that? He could come down here and buy
Close.
pretty much whoever he wants, if he was allowed to, right? So there have been some big, high-profile M&A deals that have taken place, and probably the biggest one was the purchase of Aurora of MedRelief. It was about a $2 billion deal. And Beth, you said that you think that there's going to be a wave of consolidation coming this fall.
I do.
Why don't you guys talk about that? Like, you guys are all in the capital markets. You, or Kris will be, but you've raised a lot of money. What does this look like? Who wins?
I think it's going to be a race to get very big, certainly over that $1 billion mark. And I think that there's a lot. Everybody's talking to everybody. Just put it that way, without without going any further than that. Because I'm a public company officer and my lawyer's here. But yeah, everybody's talking to everybody. And I think that the smart players are going to realize that making onesie, twosie acquisitions is just not going to get you there fast enough.
Yeah, I mean, our whole thesis for this SPAC is M&A, in that's kind of the future of the industry, particularly when you look on the services side of the business, on the non-plant touching side of the business. Scale matters. Speed to scale also matters. Being able to operate in markets outside of the U.S. will matter. And so our whole thesis was, what's a really strong company that we can put as an anchor in this SPAC that can then go on and do more M&A to offer more robust services that can that are synergistic with each other, that make sense for companies. So when you think about putting software with payroll, with CRM, all of that kind of stuff, it fits together in a very natural way. And a larger company, right now most companies do one of those things. They service a very specific set, and that's hard enough. But being able to create a larger platform with more services reduces your costs, allows you to expand faster. And so M&A has been kind of the core of our strategy for this SPAC the whole time. And I think it also applies to plant touching businesses because it does become a scaling factor over time. And really, it's not just about size, but it's about cost reduction, right? Getting to efficiencies. In the US, it's really hard to get your economies of scale because you're operating on a state-by-state basis, just the same things that you would just do in normal consumer packaged goods, like shipping things from one location everywhere. You can't do that here. And so you have to think of, you're replicating costs all over the place, headcount, all of this kind of stuff. And that's why M&A is going to matter in the future to be able to reduce some of that.
Yeah, I mean, I agree with all this. I think when I look at the landscape of what's going on in the U.S. right now, I think we're in when we look back on this, will be sort of referred to as the first stage of consolidation, and this is more the onesie twosie, right, acquisitions that are going on because the big players can't come into the U.S. right? Either the big Canadian LPs, the Canopies, or whatever can't really play here yet, and certainly the big alcohol tobacco companies, right? The other potential large-scale acquirers can't play in the U.S. right now. So what you're seeing are companies like Acreage and MedMen and I mean a whole handful of others. Right? I mean we're involved in this a little bit more of a targeted basis, but that are buying up individual licenses around the country and really building a footprint in the U.S. Once these walls of interstate commerce start coming down, and once there's a major change at the federal level, then I think we start seeing the major second wave of acquisition, which is all being set up right now. Right? That's why Canopy put $4 billion into, or Constellation put $4 billion into Canopy. The Canopy's not going to exist next year, right? It's going to be part of Constellation, right? That's their entry into going in and doing more roll-ups. And you're seeing, Molson Coors is getting involved in this. And they're all starting to do this in Canada first. So when those walls come down in the U.S., those big acquirers, right, the really big folks who are already out there, right, outside of cannabis, they're not going to want to do the onesie twosie acquisitions, right? They're not going to be looking for dispensary and one dispensary here, one dispensary there, right? One grower here, one product. They're going to want to buy the multi-state operators. So I think what the acquisition wave you're seeing right now are the companies that are setting themselves up to likely be acquired in the next wave in much bigger scale acquisitions than we can see today in the U.S.
An interesting call that I've gotten in the last 30 days was a friend of a friend actually was bidding on a consulting project, and it was through an attorney, and they did not know who the client was going to be. Their thought was that it was Big Tobacco, but they were not sure. They ended up winning the consulting business and asked if I would be an SME, and I didn't know what an SME was, but it was a subject matter expert for them in the industry, and they were doing a very specific project for a very large U.S. company.
Okay, your turn. Anybody have any questions? Go ahead. Actually, can I ask you to come up to the mic so that, do you mind? Yeah, exactly. You've got 5 minutes, go.
So we represent, is this on?
Yeah, it's on.
So we represent a non-plant touching financial services company, a workers' compensation insurance company, not a brokerage, a car dealership. We are the car manufacturer. We're the risk-bearing entity. And we have a group of folks that I've known for 28 years in this space, but we're not so sophisticated when it comes to raising capital. My joke is we went to a couple of investment banks and asked for $10 million, and they said, great, give us $100,000. That's the joke. Any
No hook, I
advice?
promise.
And, Privateer was not one of the companies that we approached at that time. And for us, culturally, and what we believe in, which is the plant, who our investor is means a lot to us as well. My question is twofold. First of all, any advice on raising $10 million? And second of all, how important is it that there's a cultural fit between yourself and your investor? Thank you.
Well, Kris, you start because you're doing a roadshow now. So you want to talk a little bit
Whatever
about
you
that?
Sure. in terms of how to raise $10 million.
Not the how to. I mean, I think
Yeah,
that's
don't
a
go public
side.
in Canada. That
But the
seems to be
cultural
the-
fit, yeah. But the cultural fit, I think, is an interesting
The
question.
cultural fit, I think, is actually quite important. Now, it depends, right? If you're having somebody who's going to come in for $50,000 of that $10 million, they probably don't need to be a great cultural fit because you're not going to have to deal with them all that often, right? But if somebody, but even then, you might. But if somebody's putting in a significant chunk of that and they want to have involvement in the company in some respect, I think having a cultural fit there is incredibly important. And it's really, and it's hard, right? Because it's a hard industry to raise money in, and so it's hard to turn away money if you feel like, wow, this might go bad down the road. I don't know if we can work well with this person, but you need to really think through that. If you're taking somebody's money, you're kind of getting in bed with them, right? And you're going to have to be accountable to them for quite a long time. So and make sure everything is really, really, really well contracted, right? Because this is where lawsuits come from. You don't want to have to spend another $1 million fighting them in a lawsuit because you guys couldn't get along. And
We've got a great legal counsel with the operating agreement and the MIPAs and stuff like that. Tahira, as it relates to Privateer, I noticed that they have, and I don't know if you can speak to them directly, but I noticed they have a website, and you go to their website and you put in your URL and all that kind of stuff. Haven't heard back from them yet. I'm wondering if, what's the number? You get 30 deals a week, and of those, you really think one of them might be a good
So,
one?
I mean, it's been several years since I've worked there, so I can't tell you what the process is now. But I mean, I was one of two people who dealt with all of the inbound requests and evaluated everything, and it wasn't 30 a week; it was hundreds a week. And probably with the growth of Privateer and the publicity, that's probably increased. So, I think that they're also, it may not specifically be about that it's a good plan or a bad plan. It might be just what their strategy is right now, which I couldn't tell you what their strategy is as far as investing in companies, but my hunch is just from public information that I know, it's much more consumer brand focused and probably patient as opposed to services. And I think that when you're thinking about investors as well, it sounds like you're going to these banks and they're not probably the right group. But when you're looking at investors, it's what have they already invested in? What are they interested in? Is this the type of business that would resonate with their strategy, right? So not all investors aren't just going to look at everything, and some may, but you'll find that there are different verticals of investors who either look at plant touching only, I believe much more in services, are just looking at the experience of the management team. So understanding who those people are and targeting your pitch to them so it resonates with them, I think is really important. And maybe it's not one pitch fits all.
So Steve, I know you had a question.
Thank you.
You're welcome.
You guys spoke very articulately about the market dynamics and the enterprise dynamics going on. I was curious because all those enterprises ultimately show valuations grounded in their ability to generate revenue, right, to attract consumer interest. I'd be curious for each of you if there's, from the consumer side, one consumer pain point that you don't see enterprises addressing well. Maybe you could start, Kris.
I'm going to punt this one to you guys.
Go to Beth.
I might not have understood the question fully. Could you just repeat the end
So
of
you're
it?
saying, where's there still opportunity? Is that what you're saying?
In a sense, yeah. So
What-
you see so much on the enterprise side, where if you were on the consumer side looking back at the enterprise side, you say, here are holes. I haven't seen anyone address this well.
For me, I don't think there's anybody in the industry that likes their POS system, which is a really, really important, we joke and I'm like, who are you on? Are you on MJ? Oh, I'm on Catalyst. Someone's on BioTrack. And everybody hates them all for different reasons. There's a couple of new companies that have popped up. I mean, I know in Maryland, we're using a company called Leaf Logics, and I'm just going to see how it goes, with them. And so I would say that that's definitely an area where operators like us are frustrated. And I'm sure that there are, groups that are going after that market, but it's definitely a hole that I see.
I think I agree with that on the services side for cultivators, for retail, it's been difficult to get a product that works 100%. But I think what we also have to think about that we're still early in the market, and that we're not to the point yet where we have like oracles that service the market, and it took those types of companies quite some time to get there. And
Decades.
so we're in that decades to get
seriously.
there. So we're in this painful period right now, which where everybody's like, it's been years, but it's like, it's been 4 years, right? So it might take like 5 more, unfortunately. So I think that there's continuous room for innovation there, absolutely. I think on the product side, I still think that there are some demographics that are underserved. I think like the aging populations, the elderly community, I think there's a huge opportunity from a wellness perspective that we're not addressing because it's not sexy and it's not cool. But I think that the benefit there could be massive.
So you're talking about CBD-infused adult diapers?
Did not say that, but
No, I said that.
okay, I want to make sure you get credit for that. I did not.
It's a bad dad joke, and that's what my forte is. So. And Kris, what about you? Do you think where's there a hole that has yet to be filled?
I mean, there's way too few people of color in the industry right now, and I think that impacts products that serve underserved, that need to be out there, that serve underserved markets. If you don't have people from these communities that are running these businesses, and particularly on the product side of things, and and then on the retail side of things, right? You don't have people that can best service their communities. And just to get on my activist high horse for a second, communities of color in the United States have overwhelmingly bore the brunt of cannabis prohibition and cannabis law enforcement. And if ultimately, and in particularly some inner city communities that are economically depressed, the cannabis industry, the illicit cannabis industry, has provided one of the only real revenue streams for employment and for jobs in a lot of these communities. And so if we're taking that away, and we're saying now it's okay for people to go out and make money off of these businesses, and we don't include those people who have been most impacted by prohibition, then we haven't done a very good job of ending prohibition. And then of course there's downstream market impacts as well, again, because there are going to be products that are created to serve certain communities that can't be created unless those communities are in the boardroom, are in ownership. And so I look at things like what's going on with the social equity program in Massachusetts, the conversations that are being had around how this gets addressed in places like New Jersey. In Illinois, this is a big topic of conversation now, where they're debating a legalization bill for next year. And so I would look at these as things that are not just the right thing to do from a social justice perspective, but also will help fill gaps in the market that need filling.
So I wish there was more time, but the lady in the back's got the one up, which means I think we're done. But I want to really thank the panelists. They'll all be floating around. They're all really nice people. They're really approachable. I'm not. But other than them, thank you guys.
Thank you.
Thank you.
Thank you.